Welcome into today's video. I'm going to be going over my PayPal thesis that was dated 3rd of June 2024, so this time, give or take 2 months last year. And I'm going to be sort of reviewing it and sort of looking back and seeing, how far off was I and my thoughts building on my thesis from then. So I'm going to get right into it. I'm going to just start with a bit of an introduction and sort of cut to bits which I think are most relevant towards this thesis. I've got my iPad on my left and I'm just going to go and outline sort of what I've said. So I put as the intro, I believe the reason for underpricing of PayPal in its essence is uncertainty. Increasing competition, Shop Pay, Apple Pay, Cash App, and lack of innovation from PayPal in previous years with no clear successor. At the time, they didn't have Alex Chris. Again, no clear CEO to run the business, no innovation. I would say these are pretty fair, and this is sort of held true. And that it's weakened PayPal's moat. And then I've also put, I admit this, that they've weakened their moat, but I believe it's overreacted by investors, particularly as PayPal still holds its strong brand identity with more than 400 million customers. Lack of innovation, I believe, has started to change. PayPal, Alex Chris in particular, has improved the core offering, and he's done a few things since then, so I'm just going to stop there. I do think that since Alex Chris has come on, there have been some changes. They've sort of come out with the Fast Pass, they've started doing the advertising business model, though that the advertising business model has been slower in its ramp much slower than I thought it would have been. And I'll get into that in a minute. But what I was trying to get at here is there's a few reasons why, and what investors often don't like is uncertainty. And what I'm seeing here is I think, well, this is going to change, particularly with Alex Chris, who's just come into the picture. Now, I mentioned in my write-up as well here, I can see that I've sort of talked about Alex Chris's track record. So he's on the younger side, so he's got a long runway with the company, 46 years old. He's had success scaling and innovating financial services software brands such as QuickBooks and the acquisition of MailChimp. QuickBooks is in a very competitive space, and yet they've managed to grow consistently at 20-30% and become the market leader in that area. So I think that reflects really well on Alex Chris, who's in charge of that segment of the business. So you can sort of see why I'm sort of bullish here on the future prospects and innovation. And one of the things that Alex Chris sort of early on into his journey talked about with PayPal is that he was dissatisfied with the innovation that had occurred and was looking to change that. And now I can say there has been change again. They've rolled out the Fast Pass, which essentially means that the consumers can have a quick way to have an unbranded checkout, fast lane, and also can have a quick way to have a branded PayPal checkout. And they've streamlined that process, which also increases the store's conversion rate, which for those of you who don't know, it just basically means it makes someone more likely to buy the product that the store is offering on their website, which is obviously really valuable. PayPal takes a cut of that increase. Brilliant. So that's the model. What has sort of not matched up since then? And I think one of the things that didn't quite match up is I thought, well, right, he's got this experience. He said it's going to take him some time to build the team. He's had a year and a half now. He's built out the team, but I've still not really seen as much as I would have liked, particularly with the advertising side of the business, which made me really optimistic. So I'm just going to go into the advertising business here. So I've got Catalyst, the ad business. Preface, Facebook generates about $20 on average per user in revenue on ads per month. Though social media platforms like Facebook are used much more frequently by consumers, as well as the platforms having had much longer to refine their monetization. However, I do believe 25 cents per user per month is an easily achievable figure on PayPal's 100 million plus customers, who are predominantly based in richer countries with disposable incomes of 20% higher than on average than peers such as Cash App. So on this assumption, I think $100 million a month is fair, though this will likely take about 3 to 4 months to reach this stage, in my opinion. Again, was completely off here. And the reason I think that is, I don't think my assumptions as such were unjust, unfair. Um, you know, PayPal does have a really good customer base. Economically, they're pretty affluential. I mean, as a whole, um, the monetization, again, I don't see that being unfair. I mean, the context of writing this as well is that Uber has their advertising business and they do about 1 billion they've just crossed the $1 billion a year in revenue threshold, and yet Uber has less than half the users that PayPal has. And PayPal has much greater insight into the information of sort of the transactions and the data that this provides, which they can then leverage a lot more. Uber can see where you go and what you buy in terms of food. PayPal can see everything that you buy, including your finances. They can see where you're actually spending money. That's very directly correlated. If they can see that you're buying um, camping gear, then they can advertise that to you and then build the connections there. Now, I think where I've gone wrong here is I just assumed that it'd take 3-4 months. I perhaps vastly overestimated how complex this would be to run. I just assumed that with them bringing in the person from Uber who would run that advertising division in Uber to PayPal to do the very same thing, I would have thought the ramp up would have been much quicker here. And it's only really slowly started to be adopted. I've only heard some mentions of it within the last few months. And I think that's sort of where I made the mistake here. And in fairness to myself, I don't think Alex Chris has done as well as I'd anticipated, if I'm being honest. Not that I'm saying he's done a poor job, but I don't think he had done as well as, for example, his track record in QuickBooks had led me to believe. And this isn't necessarily a fault either. And I mean, it's still early days. It's hard to tell because a lot of the work he'd been doing is internal. But I still am a bit disappointed with that growth there, particularly in the advertising segment of the business. However, I'll move on from that. And I think that's sort of, just before I do, I think that's sort of where the bridge in valuation was missed, because the growth is significantly lower as a result of this. I mean, the thesis still holds true. It was at 16 times earnings. The average company in the S&P historically trades at 18 times earnings. The average company isn't as good as PayPal, let's be honest. It's capital intensive. It's nowhere near got as good of a moat as PayPal does. And they're all in competitive industries. So what if PayPal is as well? So that's my thesis here. I mean, PayPal's still done all right. I'm roughly break even, slightly down this year. At some point, I was up nearly 60-70%. So you could say I've done okay in the position. I'm still holding it long term. Yes, their growth hasn't been as good as anticipated. I'm anticipating sort of 7, 8, 10, 15% growth, top line and bottom line, in part due to the advertising business, but it's not been as aggressive as I would have liked. But that's okay, because even then, because I had such a large margin of safety to begin with, even though PayPal's results have been disappointing, to be honest, I've still come out unscathed as an investor. And I think that sort of, to me, highlights the importance of margin of safety, but also understanding that a lot more things can go wrong than you thought. And if something is new, it's often unproven. And it was in this instance with it being the advertising business having never been done before for PayPal. Now you could argue, well, I've seen it work in Uber, so I thought, why can't it work in PayPal? Again, I don't know. I'm yet to find out, but again, it's still only been a year, so it's a bit early to tell. And I look forward to reviewing this company a year from now. I think by then we should have a very good understanding. Alex Chris would have been in his role 2.5, 3 years by then. And that would have been plenty of time to sort of start this rollout, and should be at least midway sort of through this. Or you should have at least, started this, and you could start to see some results on the balance sheet. Then again, I look forward to seeing the results here. Again, if I was to take away one or two things, I think the moat here is very valuable. The quality of the business itself, in terms of the number of users, has definitely protected the business, even though it's been run by, you could say, poor managers. Historically, valuation has limited my downside here, and the advertising business was sort of meant to be that, you can call it a catalyst, but something that really creates shareholder value there. Yeah, still looking forward to seeing how it does. If you've got any comments, any thoughts, any questions, let me know. Looking forward to reading them and getting back to you. If not, I'll see you on the next video. Thank you.